Different techniques for construction cost planning. Planning costs. Cost planning is essential in construction because constructing a home is an expensive undertaking and any errors could cost the client dearly. It is crucial to understand how to plan and to make sure the structure is appropriate in terms of the available resources. To make sure you get the most for your money, all elements should be taken into account. Furthermore, it's crucial to remember that a structure shouldn't cost more than the client has budgeted. The customer should be able to apply a variety of cost planning techniques during construction in order to prevent budget overruns. The client's budget is roughly estimated using these techniques. As expenses do not vary significantly within the same place, one approach is to look at comparable structures built recently. Before starting construction, a developer should always inquire about the going rates. Comparative cost planning during construction refers to a process that involves many modifications being made to similar structures that have recently been built in the neighborhood. The client is making alterations to the size of the new building. Services like water, sewage or septic tanks, roads, and differences in material prices are other factors to be taken into account. There have been many different cost planning techniques developed in recent years, but there is still no one approach that can be successfully used for all project types. Effective cost planning is mostly accomplished using the comparative system and the elemental cost planning system. Profit. The difference between a company's total revenue and its opportunity costs is known as profit. Profit in traditional economics refers to the return to the employer of capital stock in any labor-intensive but productive endeavor. Actually, these two definitions are interchangeable. The reward for an entrepreneur or a group of entrepreneurs is economic benefit in both cases. Thus, economic profit is contrasted with economic interest, which is the payout to a stock, cash, or bond owner. Profit in accounting or finance refers to the gain in wealth that an investor experiences as a result of an investment after deducting all expenditures related to that investment, including the opportunity cost related to other investments. Budget. A budget typically includes a list of all anticipated costs and income. It is a strategy for both spending and saving. Microeconomics employs a budget line to show the trade-offs between two or more products, hence a budget is a key notion in this field. A budget is, in other words, an organizational plan that is expressed in monetary terms. In conclusion, the goal of budgeting is to create a model of how our organization might perform financially if particular strategies, events, and plans are carried out. This includes providing a prediction of revenues and expenditures, enabling the comparison of the business's actual financial operations with the forecast. ROI, return on capital. The effectiveness with which a corporation utilizes the capital, owned or borrowed and invested in its operations, is measured by the return on capital. The following is what return on invested capital is equal to. A net operational income after taxes is calculated as total assets less cash and investments, apart from those made in strategic alliances, non-interest-bearing obligations less total assets. If a corporation's return on invested capital is higher than its WACC, value was created by the company. The corporation lost value if the return on invested capital was less than the WACC. The formula for calculating return on capital is as follows. Cost-to-value analysis. Cost-value reconciliation, CVR, combines the predetermined totals for cost and value to show a company's profitability. Its goal is to guarantee that the earnings represented in the company accounts accurately and truthfully reflect the current financial situation. CVR serves two purposes in this regard. In addition to the Standard Statement of Accounting Practice No. 9, SSAP 9, which outlines accounting recommendations and requirements for the construction industry, there are a few other requirements that must be met. The first is the requirement to provide statutory accounts, which is a legal requirement to provide specific financial information. Percival, 1997. Second, and perhaps more crucially, is the dissemination of data that can directly affect how operations are managed inside a corporation at all levels. Percival, 1997. Naturally, this depends on the information being delivered and interpreted correctly and appropriately. Therefore, the information must be presented in a way that will allow management decisions to be made using the statistics given as a guide. 2. Cost-value analysis. It is a methodical strategy to providing the essential services for the least amount of money possible. Value engineering was first thought of as a cost validation exercise that had no impact on the product's quality. It wouldn't be called value engineering to simply leave out a benefit or finish. This gave rise to the second definition, which is a systematic method for identifying and removing needless costs. Cost that does not provide usage, life, quality, aesthetic, or customer features is considered unnecessary. Task 2. Cost management systems. The goal of construction management and construction scheduling is clearly cost control. It should be understood that no amount of paperwork will be able to restrict building costs. The manager must ultimately decide that something needs to be done differently and put that choice into action in order to acquire true control. It is more of a cost information system because the paperwork gives instructions on what control activities should be implemented. A cost control system's components are 1. Observation. 2. Observation is compared to a desired standard. 3. If necessary, corrective action should be taken. A management should be able to monitor current cost levels, compare them to a standard plan or norm, and take corrective action to keep costs within reasonable bounds with the aid of a construction cost control system. The majority of construction cost control systems respond slowly. Even the best cost control system would report on what had been happening over the previous week or month. Nothing could be done if the performance of such operations was reported to have exceeded estimates of their individual expenses because some activities in construction projects could end in a week or a month. 3. There have been many different cost planning techniques developed in recent years, but there is still no one approach that can be successfully used for all project types. Effective cost planning is mostly accomplished using the comparative system and the elemental cost planning system. Cost element planning. An basic cost plan divides the estimate into a number of components that can be compared to subsequent estimates or to actual expenses as the project moves forward. The Building Cost Information Services (BCIS) analysis of project components is the one that is most frequently used. Money may be transferred between elements as long as a proper balance between them is maintained and the overall target budget is not exceeded. Normally, each element is viewed as a cost center. The initial cost plan is probably going to be based on rough numbers, which gives us a good foundation for judging the accuracy of future predictions. The project manager maintains control by continuously comparing the estimates for each cost center to the allocated budget. Any cost deviation from the cost plan is detected as the design progresses and costs have been made. After that, decisions are made regarding whether to allow the element's price to rise, which would necessitate a matching reduction elsewhere, or whether the element needs to be redesigned in order to. Benefits of planning for elemental costs. The major reason it is the first option that many people have in mind is because it is an adjustable system that can be employed with the proper adjustments at all phases of the design process. Because it is flexible enough for most building projects, this may be a great advantage. Their fundamental analytical framework, the element, indicates that it is a system that parties may comprehend. This strategy can be easily grasped by all participants due to its simplicity. Additionally, it is simpler to accomplish because of its simplicity. Rapid comparisons between projects and between elements are possible, and individual adjustments are possible for each element. Another significant benefit of this is that it can be readily altered to accommodate budget increases in the event that funding is increased for the building's expanded services. Elemental costs plans give the design team members access to elemental costs and the ability to predict expenses early on in the project, which gives other team members more control. Elemental cost planning's drawbacks. Elemental cost plans take more time and work to prepare, but this investment should pay off in superior decision-making support. As each component must be taken into consideration separately, this procedure can take some time. To achieve cost accuracy, extensive cost databases are needed. Nevertheless, this might result in costly software and training expenditures. If items are to be correctly assessed and modified, high degrees of aptitude and competence are needed. Finding and hiring qualified employees with enough experience to manage cost control can be expensive. Comparative framework. Comparative cost planning looks at what might be referred to as a market of alternatives available to the designer in respect of each part of the building, and which are both feasible and acceptable to him. It assumes that initial feasibility studies and cost advice have determined the general layout and arrangement of the building in light of its total estimated or prescribed cost limit. The analysis of different design options considers all the side effects of choices made about various construction components in relation to one specific component. Prior to beginning the development of his design, the architect is given the knowledge about the alternatives in a way that enables him to make thoughtful selections in light of their individual order of cost and their cumulative influence on total cost. After making his design decisions, he develops them, and the cost plan should only need to be adjusted if he changes his mind. The comparative method aims to preserve flexibility in picking of a mix of feasible design solutions that will fulfill the intended goal rather than enforcing tight cost constraints for the design of specific aspects. Instead of trying to regulate the design piecemeal in regard to aims for specific portions of the task, it is more concerned with comparing multiple alternatives within a total amount. Its goal is to illustrate how expenses are distributed among various architectural components and what economies are possible, not necessarily to demonstrate how inexpensively a structure can be constructed. This gives the architect the freedom to interpret his design as best he can within the constraints of his cost terms of reference. This ought to encourage design economy and make it easier to compare how elemental costs are distributed among various buildings. Benefits of the comparative system. The comparative system aims to demonstrate to the architect the financial effects of their choices. As a result, the architect has more control over the project and may anticipate problems before they arise, which saves time. For convenience of comparison, costs are also stated as a cost per square meter of gross floor space. This makes it simple to understand for everyone because a regular individual could do so with a quick glance. A component's price can be changed without affecting other elements' unit expressions. As a result, making those minor adjustments becomes much simpler without having to worry about the units. Comparative system drawing drawbacks cannot be assured to include every occurrence in real life. Due to the fact that each component is not taken into account, this can be a serious issue. It is standard practice to provide a sum at the conclusion of a cost plan. This process can be drawn out and time-consuming. The overall layout can frequently get complex during the cost plan production process, making it difficult for others to completely comprehend. Both approaches have benefits and drawbacks, but elemental planning has some drawbacks, such as the requirement that the architect have very high standards for their talents and abilities and have some cost planning knowledge in order to maintain their design elements within the cost plan framework. Additionally, the comparative system contains flaws. For instance, the architect will have to make very dangerous choices very early on. However, this does not apply to industrial buildings. In my opinion, the elemental system is better suited for usage with residential buildings because comparisons can be made with similar buildings that share a lot in common.